Meet Colin, the former financial advisor who achieved gains of over 100% on not one, not two, but 16 crypto investments. His overall gains stand at 155%, even with a few wipeouts.
My crypto holdings, I anticipate being about $250,000 by this time next year.
One of the main objectives when starting his crypto journey back in 2021 was to repay his home mortgage by 2025.
Because I'm single, I don't have any kids, it's just me. Having that mortgage paid off was the priority.
Well, using a combination of various financial strategies, he did better than that, paying off the mortgage on his house in August of this year.
I mean, I don't have to worry about another rental mortgage payment ever. My house is safe.
His portfolio currently boasts over £103,000, and this is after the mortgage repayment. Also, high on his most wanted list was to use the investment to support post-retirement income and capital needs. So, without further ado, let's hear from the man himself. This is really interesting because uniquely you were an independent financial advisor. So when it comes to investing your own money, how long have you actually been investing? Before you came to us?
Oh yeah.
Yeah.
Since late 80s,
right,
90s
and that was
or
mainly
something.
what, stocks?
Property.
Shares? Oh, property?
Sure.
Oh, that's interesting.
Yeah.
Not stocks or shares?
No.
Okay, so what got you into stocks, shares or cryptos then?
I came to your seminar
Yeah. Okay.
in 2016
Okay.
and had a couple of days, and at that seminar you only just touched on cryptos. It was a new thing. I think it was 2016 or thereabouts. It was a new thing. You touched on it and you said this is going to be massive. But that 2-day seminar was about stocks and shares.
It was on the workshop itself.
Yeah, it was. We physically actually came to Boreham Wood.
Oh yeah.
And went to
computers
some place.
each, practicing, because it's all online now.
Yeah.
But we still do it live, but virtual. And now it's 3 days, just to practice more. But so at the time, yes, got it. And yeah. But I mean, I was just starting to look at it. That's all, you know. And funnily enough, because I was an expert in stocks and shares, I said no to it.
Same here.
You know, yeah, but I said no to not just to myself, but to so many people.
Yeah.
And they listened, and they should have gone in.
The thing is, that's not something to beat yourself up over. How would you possibly have known
Because I didn't
what
do
a
my,
phenomenon
I didn't
it
do
was?
my research, because I knew what I was doing was working. Don't do that. What is it? It's not. Yeah, I literally used to say, what, this digital stuff? It's not solid like property. That's what I used to say. And then somebody said to me, yeah, but why not? Give me why not? I didn't have an answer. That was really embarrassing, right? So I did a deep dive, and I went, oh my goodness, I left over $80 million on the table. But and arguably I should have been the first to be in, arguably, but it kind of works against you.
You get this all the time. You get it in financial planning as well, where you'll be talking to someone, and I'm sure you've had this countless times, when you talk to someone about investing, stocks and shares, gilts, bonds, equities, whatever it is, or crypto, and it becomes apparent very quickly that that person ain't the slightest bit interested. And in fact, they, as an excuse to get out the conversation, will say something like, I'm useless with money.
Oh yeah.
And again, for me, countless times, the amount of people that say, I'm interested in building wealth for the future, and you say, okay, how much wealth do you want to buy? Looking at your workshops, your 3-day workshops, which I've been on 6 or 7 times now.
That'd be brilliant.
That question, how much do you want to make?
Yeah.
And you get all those
round numbers.
I want $1 million, I want 100 million.
2 million, 10 million.
And I always think, well, £1 million, if you stuck that into an investment and took an income from it that had a chance to grow as well, you could probably bring in about 50 grand a year.
Only just
with £1 million. And £1 million ain't going to cut it if you want to sustain that income
because of inflation
for the rest of your life.
Yeah,
Yeah, absolutely. So I always think in that part of the workshop, virtually hardly anybody has actually thought this through seriously about what is it that I actually need. When we come to talk about my objectives with crypto and what I've managed to do, the overriding thing has not been because you think crypto is a good idea, I'm going to do whatever you say, or what anybody else says. The overriding thing has got to be, what are my goals? What are my timescales? How much money do I need, not only to achieve that goal, but to write in a margin of error if things go wrong?
Do you know what you say there seems so obvious once you hear it, right? But most people wouldn't even think of that. People come to us and say, I want to make $2,000 a month. Okay, how much do you have to invest? $2,000. Wait, you want to make 100% and then
Every month
and keep your... It's not thought through, you know.
No.
And some of them do have more money. It's just that they haven't really thought it through. Once they think it through, it's like, but who spends time doing it?
Exactly. And if you have $2,000, you might as well just go to the casino and put it on the roulette wheel, because you've got to be so lucky for that $2,000 to grow to anything that's going to be sustainable.
You could do that with
sure.
cryptos potentially, but not really, because you need to diversify enough, because you know that. Anyway, coming back to you, so you started 2016 was the first time you heard about it.
Yeah.
And then you thought, oh, what's he saying? And then what? Did you do your own research, or did you go?
No,
what did you
no, I wrote it off, same as you.
Yeah, same as me.
I didn't give it a chance.
Do you think people need to hear things several times sometimes before they latch onto things? Because I always said to people, bring your kids, so that they don't hear it for the first time when they're 40 or 50. They probably won't act on it now, by the way, but it's fine. But they don't want to hear it for the first time because they won't act on it at 40 and 50. So let them not act on it now, and maybe in a couple of years they'll hear about it. Then maybe and then by 2030 they'll definitely have acted on it.
Strange you should say about the kids thing. Why aren't more kids doing this? The parents can fund the play money, if you like.
But the parents are only just learning themselves.
Yeah, I know. But I said to a friend of mine, very close friend of mine, 4 or 5 years ago, he'd got a kid and he was, 13 or 14 or something. And I said to him, my friend, give him a couple of £100, 250 quid, and get him involved with crypto.
Yeah.
It'll set him up for life. What did he do? Nothing. Absolutely nothing. I referred his son only a few weeks ago to a place that I'm investing in. In fact, I referred him actually to Zandium.
Okay.
What's he done? Nothing. Nothing. Not even looked at it. So you can lead a horse to water, but a pencil has to be led.
Oh, very good.
Very good. Whole Laurel and Hardy one.
That's very good, very good. So, so you didn't do anything, but now, what are the results now?
Okay, just before we get to that,
Yeah.
I didn't do anything with crypto then. I didn't do anything with stocks and shares then, because my view was I could do better in property.
Okay.
And I have done very well
Yeah.
in property. But I went to see a place I was planning on buying in Wolverhampton one day. So one of the key questions to the existing owner who showed me around, why are you selling? And he said, I'm going into crypto. He says, I'm already in. And he said, anybody that is not in this is a mug. Anybody that's not getting into this is a mug. This guy was a very successful investor and landlord. And that just triggered something in my mind. And I thought, you know what, he's right. This keeps coming back to me.
You've got to hear things several times.
Yeah, so I went away and did some research. And if you look on YouTube, you'll get all sorts of people saying all sorts of different things. They've all got their own agendas, or they're trying to hike prices up of this or that or whatever. And then I found Investment Mastery and you. And I thought, hang on a second, I went to see this guy years ago. So what makes sense to me is, not only are you still going, investment mastery is still going
Okay.
all these years later.
20 years now.
And if you're still going, that you've got to be doing something right. So let's explore this. Let's see what this guy's doing. And then I went on the course,
Yeah.
and I thought, yeah, I'm in here.
Yeah.
I'm doing it.
Okay. And results?
Oh, it's crap. I started working the strategies.
Yep.
And I think I started in 21 or maybe 22. And the prices then had dropped massively. It was sort of on the floor.
That's good.
Yeah. So I started investing in several different assets. I hadn't got a clue what I was doing other than the strategies. I think it's all right saying do your own research, but researching a crypto is so bloody hard.
Yeah.
There's that much involved. Yes, you want the right leadership, the right team, and all of those.
Economics.
Yeah, you got all this stuff, and just like the investment world, the big investment houses, the governors and the investors don't hunt out these individual companies themselves and see whether they're worth investing in. They hire people who do that investigative work, and they will report back and say, on the balance of things, this is not a dead cert, there's no such thing, but overall, this particular company has got an edge over the average. So what we're going to do is put some money in there. But when you look at cryptos, I don't understand it. I don't know who the latest ICO was, but they came back the following week on the Tuesday and had another bite of the cherry to explain what they were doing. I don't get it. I don't understand it. UTIX, well, they're selling tickets, and they want to battle with the ticket masters of the world, which
so
in anybody's
you can
book,
understand that, right?
Yeah. Which in anybody's book, Ticketmaster rip off anyway with this so-called intelligent ticket pricing. Whoever came up with that, it's a genius for Ticketmaster and for the artists. But the artists, if they want to, can say, no, we ain't having intelligent pricing. The price is gonna, the price of the ticket is going to be the price of the ticket.
So tell me about the results.
The results, I started to see some results actually far quicker than I expected. Teller was one example. Well, it increased by the 100%, so I pulled out some of that. Then it increased again, 100%, pulled it out again. And there were several of these that I just couldn't believe how quickly these things were growing.
Same.
And I pulled out, according to the strategy, the percentages that I was supposed to, and I used that to reinvest into other assets that I wanted to get involved with.
So you're diversifying?
Yeah, diversifying, yeah. I mean, that's been key for me. You know, again, on your workshop, you do the roof and you do the pillar. You know, you need other pillars to prop you up. You may need a job, you may not. But you need property, you need investments, you need
business,
crypto, all sorts of things that can prop you up. So if one thing falls apart, you're propped up by the others, and all of these things go in cycles. So property cycles, property's done particularly well over the last 2 or 3 years. Crypto is going to do well over the next 12 months. Then it's going to sink as the cycle
So then
goes into
you need
a
to
new
go
one.
into something else, that's right.
Yes, absolutely.
I think a lot of people haven't thought that through, you know. Okay, so can we have some numbers?
Yes, I put in, I suppose, 50k all in. Some of that was in the ICOs. I set some aside for contrarian momentum. And the objective for me was, because I'm single, I don't have any kids, it's just me. I wanted to be mortgage free by March 2025.
Oh, so you want to pay off your mortgage?
Want to pay off my mortgage. So using a strategy called equity release, now known as lifetime mortgages. I did part equity release. I needed 192 grand to pay off my mortgage. I ain't giving the West Bromwich Building Society 192 grand. Why would I do that if I'm single? So I needed a way of paying off the current lender, the West Brom, but I didn't want to use all of my, in fact, I didn't want to use any of my own cash to do it. So I did partly equity release, now known as lifetime mortgages. It's a way of releasing the capital out of your property. As you get older, if you are finding it hard to make ends meet, you can't sell a window or a door frame, to raise cash. So equity release, there are specific companies that specialise in lending you the equity in your property, and you pay no mortgage. So,
Well, you must pay them something.
yes, but you pay when you go into a nursing home, the survivor of you if you're a couple, or if you die, then the company takes what's owed from the value of the property, and then the rest falls into your estate. There's a no negative equity guarantee, so the company can't take more than the value of the house, but also there is a specific calculation that's required when you take a lifetime mortgage. It's only, let's say, 40, 50, 60% of the value of the property that they will lend you depending on age and health. For me, diabetic, high blood pressure, stroke.
Too much Strongbow.
Too much Strongbow. It was, I got a higher lending ratio by going to a specialist equity release lender.
Okay.
So out of
okay. So, I mean, my real question is, are you on track to pay off your mortgage?
It's done, it's paid.
You paid off your mortage?
Yeah.
How did you do that?
I set up the equity release, and the equity release company, I can't remember the figure, but it was about, let's say 155. So they will lend me 155. So I need the difference between 155 and 192. Now I can either pay that out of my savings or my investments, or I can use the investments to grow and take the amount I need to repay the surplus.
Yeah, I would do that.
That's what I did. So I got the equity release set up, and you don't have to complete on the deal there and then. You've got a period of months to take up the offer. So I had it set up, and I'm thinking, I don't really want to sell my crypto. It's going to explode.
Yeah.
Why should I sell it? So I ummed and ahed for quite a few weeks, and I thought, what are my goals? My goals have to come before any other need. My goal is to pay off the mortgage. Now I could just leave that crypto to grow, and then at the last minute, when my equity release mortgage is going to expire, I cash in the crypto and I do it then. Even though you might miss out, and I have, on a lot of growth on the, it was Bitcoin and Ethereum I sold. So even though I've missed out on that growth, the guarantee of having that mortgage paid off was the priority. So I cashed in August or early September, cashed in just enough Bitcoin and Ethereum to make up the difference of what I needed, got it in the bank, paid off the mortgage, and now I save 1,150 odd quid a month that I was previously paying in interest. So
you're debt free?
I'm not debt free. I'm personal debt free. I've still got debts on investment properties.
Other properties, yeah.
But that's good
properties.
debt as opposed to bad debt.
As opposed to bad debt.
Yeah.
That's an important distinction. That's fantastic. So while you were making this, congratulations, by the way.
Thank you.
That's awesome. How does it feel?
Fantastic. I mean, I don't have to worry about another rental mortgage payment ever. My house is safe.
I'm sure a lot of people would love to feel that.
Yeah.
Yeah.
So crypto is wonderful. So are stocks and shares. So is property. But personally, I wouldn't be doing any one of them to the exclusion of the others. Diversification needs to apply, I think, not only within crypto, but within your wider portfolio. Do you know, there are so many people all over the world that if they lost their job or if they fell ill, they couldn't survive 2 months.
Yeah, crazy.
They couldn't pay their way for 2 months because they had zero savings.
Wow.
So there are 3 types of savers. Savers. There are people who say, I can't save. And there are people that say, I don't need to save. They fall into one of those 3 categories. For me, doing 2 paper rounds when I was 12 at 2 different shops every day, for me, it all just made sense. Instead of being like my mates who never had any money, just work your ass off, just get it done.
Yeah, but even better is outside of that category is to be a saver and then an investor.
Yeah.
So straight, because what are you supposed to do? Save it where? In a bank. So is to learn how to invest. And once you know how to do that, you just can't take that knowledge away. You just keep doing it.
That's right.
Keep compounding.
And if you have no savings, again, this is so common that you might think that you need to create more income, neglecting the fact that your outgoings may very well contain 100, 1,000 of unnecessary expenditure. So why work your ass off to make another 500 quid a month if you can chop 500 quid out of your outgoings? People rarely do that as well.
That would be really smart, but hardly anybody does that.
Hardly anybody does
They'll
it.
go the other way.
Yep.
So the more they earn, the more they'll spend.
Absolutely.
And it just keeps going and going and going.
We can get a better
and then
car
if
now.
something goes wrong, then it's really bad.
Yeah, absolutely.
Yeah.
I used to...
so earning more, learning how to invest and spending less.
Yeah.
I mean, you'd be financially free in a few years.
Yeah, absolutely. And if you...
I can tell you used to be an IFA.
if you don't have any savings and you're interested in crypto, well, say, even if you've got 100 quid, put 50 quid into the bank, into another bank account that you can't touch, just shove it away, put 50 quid into crypto every month. And that's the way to build wealth. It's, Buffett didn't, suddenly grow to a billionaire overnight. He's done it for decades, since he was 10, I think, till he was 90 odd.
But they don't think of the future in that sense. Because he's been doing it for 70 years now.
Yeah.
Because 70 years of compounding. Think about that.
Yeah.
Not 7. 7 is not bad. 7 is quite good, right? But not 17, which would be most people like 70. 70 years of compounding.
Yeah. In 1992, I was in America, and I wanted to buy a book. I don't read novels. I only buy self-help or financial books. And I bought a book. I can't remember who wrote it, and I can't remember the name of the book, but it was about compounding. An entire book about compounding and the effects of compounding.
Was it Darren Hardy, The Compound Effect?
I don't remember. It was, again, decades ago.
Okay, because what he talks about is that compounding in everything, not just money, in everything.
Yeah.
So if you eat this cake today, are you going to be obese? No, but over 20 years you will. If you smoke something now, you're going to have wrinkles and die of cancer. Not today, but you will over 20.
Yeah.
So there's a positive compounding as well. That's what we're talking about, right? But
Yeah.
there's also a negative compounding. People don't realize
Yeah.
that. And so you can have 2 people, 2 brothers, 2 sisters. One eats the cake or does the smoking. The other one doesn't. Sorry, I should just. There's this one. Health is fine, and this one is.
Yeah.
And the difference after that time is, even though they could be twins now, it would be absolutely huge. Well, I'd love to know from you, while you were making this money, I'd love to know, how did you, what strategies did you use, first of all?
I'd used the small cap, the
did you use CCA as well?
CCA and a contrarian momentum. Contrarian momentum, it took me a while to get my head around that.
And now?
Yeah, I do it, but I'm not convinced I'm going to carry on doing it just right at the minute.
Because of the huge bull run.
Yeah. And the money that I've got set aside for contrarian momentum, I'm pretty much decided that I'm going to diversify that into coins and tokens I want to top up, or ones that I haven't got yet.
Yeah, I think that's smart. I think we've been in a sideways kind of range for a while, and contrarian momentum has worked incredibly well. But I think now that the halvening event is not happened, but starting to kick in, the results of, I think now's the time to say, okay, brace yourselves, here we go. You know? So you don't want to be stuck doing trading, when you could be just riding it out. Just we put that hat on, the Warren Buffett of cryptos. That's what we need to be for the next 12 months, isn't it?
Well, for the moment, and for the moment is 12 months, and then
12, 14.
Towards the end of tail end of next year, I won't wait for the peak in crypto. I'll be gone.
Well, you have to, because you don't know where it's going to be.
Yeah.
Because if you say, I've missed it again, now you've got to wait another 4 years.
Yeah.
So I think that's smart.
And people might think, well, how do you know when that top's going to be? Well, you don't. But just like paying off the mortgage, do I take what's in my hand now and be safe with it? I've got it. And then whatever happens after that, if it goes through the roof, it's tough to take.
Bless the others.
Yeah.
Something left over for the others, that's fine. How did you, would you say cryptos is fairly volatile?
Oh, yeah.
So how
the most volatile ever.
It's insane, isn't it? What are your feeling about volatility? What is it, good, bad, indifferent?
Volatility is good if you know how to take advantage of it. The fact is, the volatility frightens an awful lot of people about, as does the negative media coverage and
it's so
comment.
negative. It's so negative. That's good, I'm glad. Keep going.
Yeah.
Thank you so
when
much.
the mainstream come in, I mean, the election, the American election is only 7 days away. If Trump comes in, I think we're in for a good time.
Well, it looks like it's in the poll, 65%. It looks like. But I don't believe anything.
Same here. Yeah. Ginsley will be gone.
God,
we've got the budget tomorrow.
Yeah.
So.
Did you do anything for that? Did you sell anything?
I didn't. I've got a sneaking feeling. I watched the Koonsberg show on the Sunday after the election, and Rachel Reeves was talking about personal pensions. And I think the phrase she used was, if we could free just 1% of personal pension funds, and you're talking about £1.6 trillion in the UK, if we could liberate 1%, we could put that to...
What do you mean liberate? What do you mean liberate?
This is the question. What did she mean by liberate?
Oh, okay.
We could put that take to so much good use for everybody. And I sat there and I thought, is she going to start applying a 1% tax on our tax-free pension funds?
Oh.
As well as potentially taking the 25% down to 20% tax-free cash.
Yeah.
It's a possibility. So, depending what happens tomorrow at the budget, my crypto holdings, I anticipate being about $250,000 by this time next year. That $250,000 I can throw into an investment bond and take a 5% tax-free income indefinitely, or I can split that up after paying the tax, of course, and buy, I'm looking at commercial property now, 3 or 4 other properties anyway. The part of the workshop where you ask attendees, why must you make this work? I'm incredibly fortunate. Some of the cases that I've seen over the 6 or 7 workshops I've seen, some of the situations some people are in, you just think, oh God, they're
it's awful.
Yeah, it is. It's
they
awful.
Have no pension.
And family circumstances, health, getting ripped off, whatever. I'm incredibly fortunate. I've had mishaps. I've had down times and things go wrong. but I don't have to make this work. I'm comfortable
Well,
as
that's
it
a
is.
shame.
Well, there's an add-on, and that is, but why wouldn't I?
Yeah, of course.
Why wouldn't I?
Of course.
Why wouldn't I
But
make
people
it work?
don't have that backbone of a financial literacy that you have, right?
Yeah.
It's just obvious. It's just obvious, right? But it's not. It's not. It's out there. It's just not obvious. This is what we're looking to change.
Yeah. It's
by
like Robert
simplifying.
Kiyosaki.
Kiyosaki.
Kiyosaki. Why in schools do they not have very simple lessons? What's a current account?
It's
What's a
very simple.
loan? What's an overdraft?
Just even if they don't understand it, just so that they hear it there first, so that the second time they're like, and then the third time they'll do something.
Yeah. What's APR? What's a mortgage?
So tell me, because that's just like fighting the wind, right? So
Yeah,
there's nothing. So how did you? So use the CC, use the control momentum, etc., and the volatility. How did you overcome? When something goes down by 50%, how did you overcome? What did you do?
Well, it's more than 50% in some cases. It's been total wipeout.
Yeah, true.
Diversification
Okay.
is the key,
Yeah.
I think, but primarily defining your goals and putting your goals first is most important. Diversification and expecting when you switch that computer screen on to see a 50% drop.
Expect it, right? Because
Yeah.
it mustn't surprise you, so that you react.
Yeah, it's part of what this does. It's part of what crypto does. It's part of what stocks and shares do.
Yeah, but magnified. So
yeah.
I would say this is the price of entry, is this volatility. And because without it, you're just not going to get rich so fast. Because let's face it, this is 10 times faster than stocks.
Oh, absolutely, yeah.
So
I signed up for the stocks and I didn't renew it, only my personal opinion, because I can't see anything getting anywhere near crypto over the 3 or 4 years period.
Yes. But now we're at that stage where you've only got 12 months, right?
Yeah.
And so what we're saying to people now is, listen, you need to start learning about stocks.
Yeah.
Because in the UK, you can't short cryptos.
Yeah.
You can short Coinbase though, MicroStrategy, and all the miners. So there's a strategy, right? But that's later. Brilliant. So you've made what 100%? Would you say on your investments?
It's around 100% right now.
Yeah.
Some have gone to zero, some have done much more than 100%. And that's the whole
But
point
on
of
average.
diversifying, yeah.
But I love that it's not just one or two, it's basically your entire portfolio.
Yeah.
Okay, and what do you think led to that? 100%.
Being willing to learn and accept that what is in your mind about crypto being a rip-off, there's something more going on, and finding out how these fairly simple strategies work. Would you think of those strategies on your own? The price drops and instead of selling and getting fearful, you buy more.
Do you know what's so interesting is that you went straight to mindset. Right, when I asked that, it was a very open question. You could have said anything, right? But you went to mindset, and I agree that is where most people need to focus on.
Yeah.
So that's so interesting.
Yeah. The fear when if you've got $5,000, that's all you've got, and you put on the screen one day and it's fallen 20%, if you're inverted commas a layperson, that's got to scare you. Is it going to go down anymore?
Of course.
But what happens here, and what I find is that's really helpful, is that you've got a whole bunch of people that are in exactly the same situation, and you've got a team of people who have been through this so many times and are able to say, don't panic, in fact, turn it round, take advantage of it.
The exact opposite, right?
Yeah,
Do you know, it's funny,
absolutely.
when you were talking about that, if a lay person, something falls by 20%, they panic because they absolutely believe it will fall more. That's number one.
Yeah.
But also, and that's why they sell, but also when something goes up, for some reason they think it's just going to continue, right?
Yeah.
And so they keep buying and buying and buying and buying. And then when the crash comes, their average price is so high, it's just
Yeah,
like,
yeah.
ugh.
Yeah.
So there's no real strategy behind it.
That's back to the mortgage thing again, isn't it? Because choice one is to take what you've got and pay the mortgage. Choice two is to leave it to risk. Okay, it's going to go up, it's going to go up, it's going to go up. Oh, it's fallen by 50% now. What am I going to do? Yeah, it's
That's total paralysis at that stage. You
Yeah,
don't have a clue.
expectation that the thing is going to
So
continually
what I
go
like
up.
about what you said is that you are not going to try and get out at the top. I mean, you can't anyway, right? So just by, would you take bits out, like milk the cow, like
Yeah.
we do?
Yeah, I'd carry on doing the strategy. There's also an
I'd
opportunity.
adapt it slightly though, wouldn't you? Because if you know that there is a huge bull market coming up, would you not adapt the strategy a little bit?
So you take less out, or you
Yes,
defer
yes.
taking it out.
Defer. Well, a mixture of defer, but also take smaller amounts out maybe at the beginning, but then increase the amount that you take out.
Yeah, yeah.
Right. So
the
there's-
opposite of getting in.
Yes, exactly. You know,
Yeah.
because we have to teach something which is so simple that people will do it. But then when you really like think about it, you go, well, why don't I, like this? And these are the kind of discussions that we're going to have over the next 12 months.
There's lots of questions in the Q&As with people saying, I bought in at this point, but now I'm fully invested on the CCA, for example, but now it's dropped even more. Do I put some more in? That's a great question. It comes up over and over and over again. And
Well,
I think
if you believe, because you were talking about how to do your research on the tokenomics, does it solve a real problem? You know, what's the social media like? Do they really have a following? You know, how many programmers do they really have on board? Is it growing? Is it not?
Yeah,
you
yeah.
know? So if Solana or Bitcoin, for me personally, right now, were to drop, I'd be getting in and in and in. You know, I'll be thank you.
the thing is, with Equitable Life, Fannie Mae, Lehman's Bank,
Yeah, Lehman Brothers.
how would you know? How would the layperson know about those things that made all of those companies crash? You wouldn't. So as a
But again, you mentioned something which is diversification.
yeah.
Right? And it's not, so, well, I went into Lehman Brothers and Fannie Mae. No, you...
And a whole bunch of others, hopefully.
No, well, exactly. A whole bunch of others in different sectors.
Yes,
This is
yeah.
what people get totally wrong.
Yeah.
Even they say, well, I'm in 3 different... They're all on the NASDAQ, mate. Or they're all banking companies. Or they're all, they're all finance. Well, one of them was insurance, one of them was a bank. They're still all financial. So, you know, it's a little... It's obvious only once you've learnt it.
Yeah.
Then it's obvious. It's not obvious before. So if you have a choice between several and one's a pharmaceutical company and the rest of them are banking, you've got to get that one. And, you know, it's only obvious once you know.
Here's a couple of things going on what you've just said. My pension and ISA, I've invested, I've diversified across a number of different companies, but I've done gold royalties, gold, silver,
Well, you're doing very well right now.
AI, and
Doing very well right now.
renewable energy.
Okay.
So 100% of my pension and ISA are across those sectors right now. Again, I can't see, you know, in the next several years,
should be
anything
okay.
doing
Yeah.
better than that.
And this is the other thing. When you now say over the next few years, you know that there will be corrections along the way.
Yeah.
But then it'll go higher.
Yeah.
Whereas people will go, but he said it would do what? And it's just dropped by 20%. Sell. It's like, oh, no, you don't. The markets don't just go up; they also go down. And sometimes they go sideways. And then, you know, so you know, and
I also.
how do you teach people that? You know.
Well, you don't teach people that don't want to learn. You teach people that have got an open mind and are willing to put the graft in and make the mistakes that everyone makes.
And I have a name for that. For me, that's a professional.
Mm.
And it could be toilet cleaning, doesn't matter. A professional is somebody who knows it takes time. And unfortunately, right, I wish, you know, we could all, but it takes time. it takes energy. You need to put the graft in. But once you have it, you've got it forever, and it gets easier. It doesn't get, because people think, oh, I don't understand it, and no, but you will. Just give it a, it's just like driving a car. You will.
It gets easier.
Of course it does.
Gets easier.
Of course it does, and it speeds up as well because everything compounds. Everything compounds, either positively or negatively. Yeah. So your knowledge compounds as well.
Oh, definitely. Yeah.
I was going to ask you about your future. What are your future plans then, in terms of pension, in terms of, are you going to carry on doing cryptos? Are you going into stocks? You said commercial property.
Yeah, I have a limited company. Depending what happens tomorrow, I have property in my own name. I created an LLP and I created a limited company as well. I created the LLP several years ago on the basis that because I think individual landlords are going to get hammered for tax, the ability with an LLP to absorb, well, I've been trading actually as an LLP with my personal properties, for the limited company to absorb the assets of that LLP is perfectly legitimate without paying any tax yet.
Say that sentence again, please. For the what? To do what with what?
Limited liability partnership.
Yep. The LLP.
Trading my personal rental properties as an LLP instead of as an individual, and then the limited company that I set up some time ago can absorb the assets of the LLP without paying tax immediately. The tax is deferred until you die. Well, I don't care. I don't care.
Well, you don't have children.
No, I don't care.
My children are going to care, but yes. But maybe I don't care. I don't know.
Even if I did, the tax
think about that one
is payable anyway.
So, but are you going to continue doing cryptos and stocks?
I am going to do crypto and stocks. Mm-hmm. However, there's a guy called Joseph Heller. Mm-hmm. He wrote a book donkeys years ago called Catch-22, which was later made into a film. And there's a great story of him being invited to a party held on a private island that was owned by a hedge fund billionaire. And he went with a friend. And while they were at this party, the story goes, his friend said to Heller, you know the guy that owns this island? He makes more in a day than you've made out of the entire history of Catch-22. So Heller thought about it for a while and he said, but I've got something he'll never have. What's that, he says? Enough.
Ooh.
And that's where I am.
Wow.
I have enough. Without cryptos, I have enough. And I'm not bragging or...
No, but we need to give this man a mic so he can drop it.
So, will I carry on with cryptos? It depends how involved I want to be with managing all this. It's hard enough. I've got 60 plus different crypto assets. Trying to keep on top of it is a nightmare. But do I really want to do that? Once I've sold out...
In the next bull market, are you not going to sell most of those and just keep in the big ones?
Yeah. I might just sell up completely. Depends on what the tax situation is going to be and whether I want to split it over different tax years or whatever. Or, as well, it depends what opportunities come up investing elsewhere. The great thing about...
you can't make sell decisions based on whether you do it this month or whether you do it in 4 months because it's the next tax year, because you don't know what's going to happen to the price.
No, but if you're maximising your allowances in each tax year, you've always got the option to buy back in. And
but you don't know what the price is going to be, and you have to wait 31 days.
That's right. Yeah. So the answer to your question is I don't know. I'll see how it goes. I'm not the sort of person that can, sit and do nothing or watch the TV all day or sit on a beach. I've always been active and done.
You're too busy in your rock band.
Yeah. Just started a theatre production, the Classic Rock Experience. First gig was the week before last, and we're taking gigs over 2025 now. We've had inquiries across Europe to get us into festivals and all that sort of stuff. So I don't know about my health. I don't know whether I'm going to have the inclination. Touring isn't all it's cracked up to be. It's a pain in the arse, apart from the time that you're on stage for that couple of hours or whatever it is. So
I've got a question for you. How do you stay updated with all the latest like crypto trends? Because you said, I've got, what, 60 different positions or 60 different coins?
60 different coins.
Oh my goodness! And you're in several positions. All right, fine.
Yeah.
Wow.
I didn't mean to get. I didn't mean to. It just happened.
Of course. Over time. So how do you stay? You know, how do you stay? What the trends are and what the latest coins are? What do you do?
I go to all the Q&As I can.
Okay.
I do the Tuesday nights.
Okay. Oh, so you mean with us?
Oh yeah.
What is one tip that you would give somebody watching here that maybe is new to cryptos or?
The best sentence of advice would be, make sure you plan for your plan not to go to plan. In other words,
Yes.
it's going to happen. No matter how careful you are, how educated you are, there are wars, elections, there's stuff going on all over the place that you can't possibly control.
Like COVID, yeah.
So stuff is going to go wrong. What I would do as a starting point, instead of thinking of an amount of money that you want, a bullshit amount of money that you want, actually work out what is it that I want from my life? What's the lifestyle? What does it cost now to run that lifestyle? Don't talk about a multi-million-pound yacht or some place in the Bahamas or whatever. Be realistic and look at what you would want if you were going to stop work or retiring, whatever your time scale is.
So to reach financial independence first.
Yeah. So in order to reach that amount over the time scale that you've got, and there are lots of calculators online to do this, how much do you need to put in to achieve that amount? And what I would do then is double it, because it's going to go wrong.
Yeah, absolutely. Well, actually, just before you said and double it, which I agree with, because of that reason, but also because you will have to do different things to reach here than you will here. And so what I always say is, if you do whatever it takes to reach here, you'll probably reach here, right? Because we're not ever as good as we think we are, and it's going to go. But if you do this, well, you're definitely going to do this. But if you do this, you ain't going to achieve this. You're just not, right?
And
so
as you get older, your wants and needs change significantly from when you're a youngster. So if you're someone in your 60s and you're just coming to crypto, then you've got nowhere near the time frame that someone in their 20s or 30s have got. So you have to adjust your expectations to suit that.
You've got other things though. You've got wisdom.
Yeah.
Hopefully.
Yeah. And you've got a property and it's paid for, or whatever else.
Yeah. You've got different things. You might have contacts, people that know, and so it's not. You know, you're never too old. You're never too young. Although everybody says that. Well, I'm too old. I'm too young. So who's right now? You know.
No, you just get on with it.
Yeah.
Just get on with it. Get stuck in. Make a start.
I know.
Make it happen.
Yeah.
So many people are on the workshop, and say, do you know what? I joined 3 years ago and I didn't do anything with it, but I'm back now. Are those people going to survive and get stuck in and whatever?
But you did that.
Yeah.
You did that, right? So this is what I keep saying about you need to hear it several times. Not everybody, but some people are 3-time convincers in NLP point of view, or 2-time. I am. I need to hear things several. Unfortunately, right? Otherwise, you know.
Same, man.
Yeah. But here, look, it is what it is. But yeah,
learning financial services.
So plan.
It's far easier than
for
this.
your plan to not to go to plan.
Yeah.
That's your.
Yeah. Make sure you write it into your plan. Stuff is going to go wrong. You're going to fall off a curb somewhere and twist your ankle, or have a car accident, whatever it is. Stuff is going to go wrong. The election goes the wrong way, the economy tanks, whatever it is. Make sure that's written into your plan, and when that happens, capitalise on it.
Because you've already planned for it.
Yeah.
Yeah.
Or you don't know what the thing is, but you know some thing is going to happen to your plan.
So what are you going to do if Trump wins?
He took over McDonald's, didn't he, a couple of weeks ago, and
They loved it.
Spent $1,000 in Bitcoin. He used Bitcoin.
No, I didn't know about that.
Apparently so. That was on TradingView.
Okay.
That he'd done that. I think he's pro-crypto. He wants to make, or he says he wants to make America the centre of crypto technology.
Well, he'd be stupid not to.
Absolutely,
it's all going everywhere else.
Yeah.
You've got to bring it back.
Yeah.
It might even be too late.
Yeah. Oh, yeah, you never know. The UK needs to be investing thick and fast into crypto. You've got all these people that have poo-pooed crypto. You've got the Chinese government that have banned it God knows how many times, but guess what? They're buying it. They're buying it. They've been buying it all along. You got...
Don't do what they say, do what they do.
Yeah.
Watch what they do.
Yeah, you got Tesla man who will put one comment on Twitter and crypto tanks based on his one comment, but what's he doing? He's buying it.
Yeah, he's got almost $1 billion worth.
Mm.
Yeah.
Yeah.
And what about Michael Saylor? He's done. Wow. He deserves it. He deserves it. To go out there and to get that much money in, which in our terms might be, $3,000 or 30 grand or something like that, right? He went out there and,
went for it. Yeah.
He went for it. Wow. So with all the success that you've had in cryptos, trading and investing, what role has Investment Mastery had in all that?
I think, has been the glue that's sort of held this together. If I was on my own, I would not have had anywhere near the success. I might have gone with another education outfit, and I might have had the same success. But it just seemed to me, when I went to that workshop all those years ago, I did like what I saw, and I liked the people. And on the workshop, you've got Dennis, you've got all the other guys who are just ordinary guys who will tell you straight out what they think. They won't give you advice, they're not supposed to, but they tell you what you think, what they think. So, together with the strategies, that gave me the confidence to get started and think, well, I already knew crypto was going to be a gold mine, but knowing that and knowing how to exploit it are two different things. So who do I trust to get that knowledge? Someone that hasn't got an agenda for this coin or that token or whatever, but someone that is along the lines of education instead of advice. And somewhere where you can ask a question and get it answered. I don't understand this. I've done this. What have I done wrong? Well, you did that wrong.
Yeah.
And if you don't get it from the guys, you get it from other people in the community.
You've literally said everything there.
Only 2 days ago,
Yeah.
I tried to get my Celestia tokens into my Phantom wallet. My MetaMask wallet. Oh, I couldn't do it.
You couldn't work it out.
Couldn't figure it out.
And these guys?
Yeah, so I put a question on the Facebook page, and a couple of guys answered and said, well, do this, do this, do this. And I did it. And yesterday, I did it in about, 5 minutes.
Yeah.
So it's all done.
So that's the community.
How nice is that?
It's great.
Rather than try and figure it out yourself, God knows how many times. Yeah.
It's the power of the community, isn't it?
Mm.
And what I say in like my slides on the introduction, like the one day, is that most educators, they misunderstand the importance of community.
Yeah.
Because people go, who cares? I
Yeah.
just want to make money. No, you don't understand. If you're stuck, right? Yes, you can ask us, and if we're there, we'll answer it. But the community, people that have been there 1 year, 2 year, 3 years ahead of you, they just go, just do this.
Mm.
And they, oh, yeah.
Well, if you're going to do that, you might just as well have created an online course that you pay for, you download, and then on your bike.
That's it.
It's up to you.
Mass market.
Yeah.
Boom. Don't worry
But
about all the hours of support. And
to have the format, the workshop format flows across the 3 days, and it covers everything, the compounding. When you're in the workshop, you don't realise how important that compounding is. And based on the number of years that you have as an attendee, you know, the further you are up that time frame, the less years you've got, and the less able you are to create the goals that you want, unless, like you say, what happens if you put another 20 quid in? Yeah, all of those things, they flow very nicely, and they cover all of the things that you would want to see for a company that's going to hold your hand while you find your feet and get to grips with things.
Thank you very much. Wow, that was indeed incredible. Colin Tippin's extraordinary journey to repaying his mortgage is a testament to the life-altering potential of strategic investing. What are your thoughts on this? Comment below.